With that out of the way, how do you use the TIX workspace to find trades? And here's the big surprise. You use it pretty much the same way as you use the other high time frame link workspaces. There is one practical aspect of tick charts that I do want to point out. They demand a ton of data and can be quite hard on TradeStation, depending on the time of day and how busy the TradeStation servers are at the time. For that reason, we limit how far back we look in time in order to find zones. We don't need to go back months and months to find zones that have been cleared long ago. We only need zones that are still fresh. So for that purpose, these rows in radar screen have all been set to only look back the last 1500 bars. Let me show you that. In radar screen, if you right click the SD zones column header like so, go to studies and say edit SD zones for all symbols like this, you will get the customize indicator tab for SD zones in radar screen. It looks remarkably similar to what you find when we saw look at that in charts, except here's for the radar screen rows. Again, there's the inputs tab with all the different input parameters, which I've already set for you, and you rarely need to change them. And then we have once again the general tab which shows some additional parameters specifically that TradeStation need to know. In here, you select how many additional data bars do we need to load for each row in here in order for it to do its work. And for simple indicators such as moving averages and so forth, you really only need a few bars. It's not that much. But for SD zones, it does need a little bit more in order to find historical zones. Again, with this, I've limited it to 1500 on the tick charts. That's the number I put in there. If you run out of zones, if you get to a point where the nearest zones are way back in time, you can either increase this number, knowing that it will actually dramatically also place a heavier burden on TradeStation, or you can just wait till price turns around and look for fresh zones that have formed, in the direction that market is currently moving. And that is what I generally recommend. So I would say, yes, you can raise this number, but leaving it there is not going to hurt you that much, I can guarantee. It is a really good idea to make the same limitation in charts. And the way to do that is, yes, you can go in a chart, double click one of the bars like this. That will open the customize symbol dialog for this particular chart. And in here, you can specify how far back in time you want to look. You're probably familiar with this. This is also the one where if you type like 5 days or 10 days or 30 days in a command, it'll look back that far in time. Here, I've set this to 1500 bars. But guess what? That is a default I've set so that all tick charts of 25 ticks or higher will default to looking back 1500 charts. That way, they will match what we're seeing in radar screen. Let me show you how to set up that default. You click cancel in here. You right click the chart background of any chart. It doesn't matter which one. You go to settings. You go to preferences. And in here, this is the chart analysis preferences. And there are a number of tabs. And hey, this general tab shows up everywhere. But in this case, we're looking for the symbol tab. And on that one, you're setting what is the default look back time we want for each type of chart we do. And you can choose the different chart types here. For example, this is where you can say for a 1 minute chart, for a 5 minute chart, for a 50 minute chart, for a 30 or 60 minute chart, how far back do you want by default to look in those intervals or higher intervals. So anything, if you were to type in a 120 minute chart, it would also use the same as a 60 minute chart. But you can also select here for a 1 tick chart, which we never use, or a 10 tick chart, which we never use, or for a 25 tick chart or higher, which is all of the ones we're using over here. And in here, you'll see I've set for bar use 1500, and I've selected down here what is the default range setting, they call it the range, to use for intervals selected above bars. So if you set this, you will by default, unless you change it, in each chart it will look back 1500 bars, thus matching what you have over here. I recommend you set this. All right. One more housekeeping item before we get started looking for trades. you may have noticed that the zone criteria preset we use in this workspace is called entry zones ticks, different from the entry zone strict that we use in the other SD Radar Futures workspaces. If I right click here and go to change on this chart only, you will see a list of the different presets that are available, and for entry zones, not for high time frame zones, but for entry zones, we have medium, strict, extreme, and ticks. We also have single bar doji zones, which actually the ticks now push that one down and occupies the slot where that one sat before. So this is you can absolutely use strict with tick charts. They work very, very well with strict. No worries there. But they find so many zones that I figured it would be okay to tighten them further. So this particular ticks preset has been tuned specifically to perform well with tick charts. That doesn't mean it blows strict out of the water, but it is a few percent better than strict in most cases, and it does find right around 30 to 40% fewer zones, which makes it a little more manageable. And I'll tell you, if you use this in a busy time of day, you will want this. If you're using strict, there's going to be so much color over here, so many highlighted zones, you will not know where to start. So that is also one of the reasons I chose this one. We could afford to lose some as long as we had as good or better performance as strict. If that meant we could tighten this net a little bit. If you trade at a more quiet or relaxed time of day or time of week, such as this now being Sunday afternoon, and you want to see more candidates show up in radar screen, have more to select from, then you can absolutely change the zone criteria preset the way that you normally do with SD zones. You do not right click here and select change on this chart only, because that will, guess what, change it only on this chart. You go to settings panel instead, where you can select a number of different settings, both visual settings and zone criteria settings, and apply them to all charts and all radar screen rows that use the same settings preset, right? That's how that works. And what you would do here is you would simply choose which preset you want. In this case, say you want to go to strict, and that will almost certainly find more zones, with one exception. Strict is limited to zones that are 4 ticks or taller, whereas ticks was deliberately set to permit zones that are only 3 ticks or taller, although it has other criteria to make sure that they are not unreasonably small, the zones. Still, it does accept them if they're only 3 ticks, which is important in some markets to have that. So that's just that caveat you have if you choose strict over ticks. While you're here, you can consider whether you want to change the zone height rule. For tick charts, and in this workspace, that one is set to draw zones from wick to wick, but it uses the adaptive setting where it says, okay, it'll draw them wick to wick, but only up to a certain point. If they become ridiculously tall, it will adapt them so that they still fit the basic zone criteria. So that's how that one works. That is actually a good fit for the tick-based charts, because often those zones you have to catch them on a wick to wick, but you don't want to have zones that are just insanely ridiculously tall. So this is a good balance fit for that. With that said, you can click apply updated settings, and that will apply them to this chart, to all the charts, and to all the radar screen rows. They are now using strict, and they are still using the wick to body but wick to wick adaptive setting for zone height rule. And finally, I want to point out what you may have noticed already, that while this is a tick chart that of course is linked to the radar screen, and whatever you click over here will show up here, the auxiliary charts here are fixed at minute intervals. And this time we go pretty low: 2 minute, 3 minute, 5 minute, 10 minute, and 15 minute. Remember what these charts are used for. 2 things. 1, to see if any zones you see here also show up on these minute charts. If they do you think that's a good thing? Yes, absolutely. That confirms that that zone shows up both on a time-based chart and on a tick-based chart. but also you use it just to see if there is a trade. If you're using this workspace instead of the futures day workspace, and you happen to see, oh, there's a great 10-minute zone. Hey, I mean, I'm not telling you you can't trade that, right? So use this to also keep an eye out for other potential trades that are not tick based if you happen to see those during the same trading session. I hope that makes sense. So how do you find trades with this workspace? And the answer is you just do what the damn thing tells you. You go to radar screen, you look for where you have highlighted zones. If they're yellow, that means they are within proximity. In the case of this one down here, is 17 minutes away, estimated. If they're orange, that means it's a newly formed zone. That's for the white workspace. In the black workspaces, the colors are blue and dark gray, respectively. And we just go to the first one that's highlighted, the Dow 200 tick. We click that one. We'll see that there's a supply zone sitting just above here. There it is, okay, sitting just above this other stuff here. In this case, let me just maximize it. And we did see that it worked very, very well when price came near it once before. Look, if we had traded this wick to wick, we would have gotten filled back then. But the adaptive kicked in and said that's just such a tall zone that it didn't allow it, to draw it wick to wick. But again, that's arguably what should have been done back then, and we would have taught that. Do we want to trade it a second time? I'm not ruling that out, but it is going to be a little bit of a counter trend when we get up there. Not fully, but a little bit. Let's look at the high time frame chart and see what it has to say about the matter. I'll just restore this chart like this. The high time frame chart was, of course, updated to 1,000 ticks as supposed to. I should add that in the ticks workspace, the automatic high time frame update is enabled by default. So that means anything you click, it will update both this chart or these charts and the high time frame chart right away. It will not wait for you to click the red link title first. The reason for that is, first of all, it's just unbearable if you have to do it all the time, because it's every single row has a different interval pretty much. So you will appreciate this, but there's also another reason that with tick charts, TradeStation often lags behind as far as data and will download further data in the background in order to fulfill the 1500 bars that we requested. And when it then updates the chart, it will sometimes arbitrarily pull away this link title, so it won't be there. You won't be able to click on it. That's a TradeStation bug that I'm trying to work around, but until then, the fix is just have it automatically update, period, and it will always update, even if sometimes that link title disappears. When you click something else, it'll show up again. Do note that in TradeStation 9.5, the automatic high time frame update feature is not available, as TradeStation 9.5 does not have the capabilities required for that. But we do here in TradeStation 10. All right, so in the high time frame chart here, we came down about 2/3 of the way, which is getting a little bit close to the demand zone, but still direction is down, and it's not unreasonable to still take a short. I would have preferred a short kind of in this range here, zone in this range here, so that we can back up there. We can short it. This particular zone sits above all this, and I'm a little more skeptical about that. So I think on this particular trade, I'm going to pass on it for that reason. But that zone worked so well before, who knows? It may actually work one more time. But for this, we're not going to be aggressive, and we're just going to cancel that one or invalidate it. There is also a 400 tick demand zone in Dow. So let's check that one out while we're here. That one sits just below current price. That's a pretty looking zone for sure. And the first thing that you may notice is, well, there's several things worth noticing. The first thing is this. You look at the high time frame chart, we don't have to spend much time on this, right? As nice as this zone is, I mean, direction is down. There's still good distance down here. Until we start moving up again, we should not be looking for demand zones. It should not take you more than 1.5 seconds to spot that this is not a qualified setup, at least according to my rules. But one thing is nice about this, that it may actually be what lines up with maybe this 3-minute down here. Not quite, actually. It's close to it, though. I think probably that 3-minute is more the cluster we have down here. Anyways, this one we cannot do. We're going to invalidate it. Move on to the next one. There's even a 500 tick in Dow, which is, wow. So that is just above where we sit right now. That's actually the one that's closest to current price. On the 2500 tick high time frame chart, It is still moving down. It still has room to go, and this zone sits just above it. I would have loved for this zone to have a little more confirmation as far as from any of the other charts. I would also like to see if there was something inside it, So this is one way I would like to look at say a 250 chart. I would like to look to see if that's if it has two candles inside that. Let me just draw that zone like this, and go to a 250 and see. And actually, that zone still does line up. So that's actually not a bad zone. It does qualify according to the rules. The location isn't terrible. The only concern I have left is that there may be some stopping here, that there may not be that much profit margin, because this here will probably stop price when we get there. One way you can, if you don't have the trained eyes for that, you can temporarily right click this and change to lax and see, whoop, that one showed up right there. So that will confirm that there is a zone right there, and we can just reset this back to its default. So that's the only thing that keeps me against that. There is one other thing. Right now is Sunday night. The market will open in another hour, so I'm not sure. I just want to put in orders for something like this, because we could gap up and open way up here. So what I'm talking about here is just the principle of how it works, not necessarily what I would do myself on a Sunday afternoon just before the next week, not just before the Christmas week opens at 6 o'clock Eastern time here. I will leave this one on here, not invalidated, just so I can watch it, come back and see how it performed. Then go on to the nat gas down here, and once again, that's an easy pick, because without even looking at this, I look over here and say, what a bloody mess. I'm not going to trade this. Off we go. Done with it, right? I'm not going to look at that. There's also a supply zone up here, but same thing applies. With this needs to resolve itself, so I'm not interested in that. I'll just invalidate that too. Go on to the next one. There's a 350, and guess what? That is the same one. In this case, the picture is a little clearer on the high time frame chart. We still have a little room to go. That's not bad. I wish there was more room to go, because from a 4012 to 4046 with this, I think this has a chance of working, but it's just I wish there was more room here. We've covered half the way, and again with the Sunday night, all of that. But this one is not terrible. It's just not a sparkling 5-star kind of setup. We'll leave it there, but not invalidated. But just leave it there so I can watch it later. And here we have the gold 400 tick. We're coming down into a demand zone. Oh, and we have a high time frame chart that's plunging down here, which means this is almost a suicidal kind of trade. Now, don't get me wrong, this zone could work. This could be the low, and price just goes to the moon from here. But according to the rules, we expect this to come down, and this would be catching a falling knife, which is traditional, not the kind of trade you want to do. So we'll take this one off, and so forth and so on. And that was there's one more in the Swiss franc 30 tick. We can take a look at that. See how spotty this is. So again, 30 tick is the lowest interval we have in an already low volume market. So this is a reason why in some of these markets you may want to just lean towards the higher intervals, or the higher intervals here. But again, surprisingly often they work. Look, like this one up here worked here, it worked again here. So as much as I was skeptical about this in the beginning, I found that they do actually work far more often than one would have thought. Nevertheless, this one already came into its high time frame demand zone, so we are and started to move higher. So we are not looking for a short until all of this clears and that whole picture changes. So this one is disqualified, is invalidated for that reason. All right, you get the picture. It does not take you very long to go through a number of zones here and see which ones qualify, which don't qualify. And I tell you, quite a good number of these work quite well. But you do want to also be a little bit aggressive with your profit taking, because some of them only work maybe for 2 to 1. And again, so do take some profit, maybe just 1 to 1, 2 to 1, and then keep a runner on to go a little further with them. But they have good stats, and I will show you that next.